If you have been someone that has been glued to the headlines these past couple of years, it was no secret that sellers had the upper hand and then some. The question today is that shift coming or not? To understand what defines a market as a seller's market or a buyer's market, it all comes down to that economy class you took in high school that you slept through, where there was a graph with a few arrows. And as a refresher, we call that supply and demand. When supply is low and demand is high, the sellers are winning. And when the supply is higher and the demand is lower, buyers are winning. Then there's the areas in between that make a slight pull in either direction. One question that branches off of this is, what drives demand? Well, as of late, it has been the mortgage rates. As soon as we see a slight dip, we see more buyers coming out of nowhere to begin their home searches. Then they increase a little bit and buyers jump onto the sidelines. It's been this teeter-totter of a situation for quite some time, especially since we saw the reality of 2 to 3% interest rates over the pandemic. Despite this conversation creating this spectrum of supply and demand, the most ideal position is to be balanced, right at that point where supply and demand arrows intersect and there's some equilibrium. A balanced market in real estate, outside of these graphs and arrows that don't really drive the point home, is having a 5 to 7 month supply of homes, which is a measure of how long it would take to sell the homes on the market now based on the current sales rate. A buyer's market being greater than a 7 month supply and a seller's market being less than a 5 month supply. In a balanced market, there's no perfect advantage or leverage over one another. Prices will stabilize and there becomes more inventory that you can choose from without having to bid your firstborn child on it to get the keys. The answer to fixing the housing market is by getting supply and demand on the same field. Unfortunately, a lot of the government intervention is just trying to dish out more and more incentives for buyers without realizing that those incentives are just creating more demand. Yes, it would be amazing for the government to hand us a $25,000 credit to use toward a house, but all it's going to do is make homes $25,000 more expensive. It's a double-edged sword in a sense, because you'd think the answer would be to incentivize sellers, maybe give them a credit to sell their home to increase supply, but at the same time, it's adding them to the demand pile as well, with more buying power to drive prices with that credit. If we could just snap our fingers and watch an endless supply of new construction home communities pop up, that would be pretty helpful. But unfortunately, it's not that quick and easy. The question today that I mentioned is a shift coming, and where is the market headed? The National Association of Realtors dished out some information showing the inventory of homes for sale all the way back from 1999 to present time, and where buyers' markets peaked in 2008 and 2010, as well as where the seller's market peaked in 2019 and 2020. For now, we are still sitting in the seller's market territory, but the trajectory from 2020 is trending its way up to what we can hope for, and that's a balanced housing market. As Mark Fleming said, who is the chief economist at First American, the faster housing supply increases, the more affordability improves, and the strength of a seller's market wanes. Lawrence Yun, who is the chief economist at NAR, talked about how homes are sitting on the market a bit longer and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals, and inventory is definitely rising on a national basis. So to break that down a little bit, during the peak seller's market time, buyers were waiving their inspections and getting waivers for their appraisals if their financial situations allowed for it. But now people are pickier. They're asking for more. They're pushing back. And if the seller isn't willing to cooperate, the deal falls apart and the home goes back on the market. And that's why you're seeing an uptick of homes jumping back on the market. That and buyers still getting a little cold feet in a bidding war situation, realizing that they are paying too much and they're like, oh, I don't want to get this, and then they back out. This market shift, which shows homes are sitting on the market longer, as July 2023 to July 2024 data shows, the median days on market increased 5 days. Sellers are receiving less offers on homes throughout the same time span, and fewer buyers are waiving inspections, jumping down from 26% in 2023 to 20% in 2024. With homes sitting on the market longer, it has buyers becoming more aggressive, and it's something I advise my buyers about too. If the home is sitting past the 7-day mark, we have an opportunity to undercut the price. But Andrew, don't you think it's too soon to lowball? The answer to that is it's never too soon. You never know the situation that the seller is going through. Many sellers in this market understand how hard it is to be a buyer, and most sellers have an interest rate we may never see in our lifetimes again, but they are selling. Why is that? Because they have to. Whether it's a probate or estate situation, work is forcing them, or a family crisis, these people need to move, and they are willing to take less if it means less headaches and quickness. All that to say, this ball is slowly rolling into the buyer's court, or a more balanced court, I should say. And that's why it's important as a buyer to not have the seller's market mentality that you have to waive inspections, offer $1 million over asking price, pay for post-close occupancy for the seller, and buy them a nice steak dinner on top of it. Are there situations like that that still happen in this market? Of course, but that overspending mentality needs to start getting swept under the rug and realize this market is different than it was even last year. And that's where this housing market is yielding more opportunities. One being, there's a growing number of homes on the market, which is 36.6% higher than it was last year at this time. The median sale price of newly built homes dropped $8,100 on average, which shows they are motivated to sell and may even throw some additional incentives your way too. Then, of course, the mortgage rates have dropped from nearly 7.8% last year to right around 6.5% now, depending on your situation. All of this data suggests that we are heading in a better direction. The market is flattening, it's stabilizing, and getting closer to where we need it to be. Is it there yet? No, but we are getting there slowly but surely. As far as 2025 projections, Fannie Mae, Mortgage Bankers Association, the National Association of Realtors, and Wells Fargo had all their data thrown together by Keeping Current Matters to give you an at-a-glance perspective. And in terms of mortgage rate projections, when averaged all together, we have 6.46% at the end of quarter 4 of 2024 and 5.98% at the end of quarter 4 in 2025. Despite all the projections being different and all over the place, they all project that rates will be lower than they are right now. As far as the total home sale forecasts, in 2023, for reference, there were 4.8 million homes sold, and in 2024 there's an expectation of around 4.5 million. The average of all the associations and banks I mentioned earlier stated the total homes sold for 2025 would be about 5.4 million. The thought is, if these rates drop to where they are forecasted to, sellers will think, that's not too bad, and then they'll sell, creating more inventory, but there would be an uptick in competition for the buyers wanting to buy these homes too. So yes, inventory will increase, but so will demand. The next forecast I'm sure you've been dying to hear about is the home price forecast, with 10 different projections ranging from 0.3% to 4.4%. The average of all 10 brings the percent of home appreciation to 2.6%. So to summarize these projections, mortgage rates will drop, supply and demand will increase, and so will home prices. Based on everything I have thrown at you, from balancing of the market to the 2025 projections, what are your thoughts on this? Comment below. If you're thinking about moving to Michigan in one day or a million, feel free to reach out anytime. I also have a link to the Living in Michigan newsletter to give you insight on all things Michigan, so be sure to subscribe so you never miss out. Thanks for watching. Until next time.